Oracle has been one of the more interesting AI stocks I've been following year to date in 2024. The company is not as well known as some of the other AI stocks that are thriving, and I think that investors will benefit by taking a look at this interesting AI stock. I've rated it as a buy before, I've recommended it as a buy, but in this video, what I'm going to do is conduct a discounted cash flow valuation of Oracle to see what the intrinsic value per share would be if we utilize the discounted cash flow valuation model to value this stock. Now, I'm going to use several estimates and assumptions to make this price target, but I'm going to share with you precisely where I'm getting all of the numbers from so you can see for yourself and determine yourself if I'm being too optimistic or too pessimistic. All right, so let's take a look at this interesting AI stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the numbers I'm going to need for this price target, this DCF, is the beta for Oracle, which stands at 1.01. I'm also going to need the free cash flow estimates for the next 5 years. And I'm getting these numbers from ticker.com, TIKR, which is a news source I've been using for my discounted cash flow valuation models since Yahoo Finance stopped publishing 5-year EPS growth estimates for many of the companies that I've been following. I switched to this newer source, which offers me the 5-year free cash flow estimate instead of just using the short-term growth rate for the 5-year estimate, which I'll talk a little bit more about later in the video. So for Oracle here, we have the starting point of 2024 at $11.807 billion in free cash flow. Then we have it going down to 8.534 billion, 12.3 billion, 16.3 billion, 24.3 billion, and then 30.5 billion in the final year where we have the estimate, which is 2029. I also need Oracle's average diluted shares outstanding, which stands at 2.851 billion. I need the company's long-term debt, which is 84.5 billion, the cash and equivalents balance of 10.6 billion. And the company's market cap stands at $529 billion. All right, so now that we have all of the numbers, all of the estimates that we need to make this discounted cash flow valuation model, I'll jump into my model, which I've already created here. So the starting point is here at 2024, $11.807 billion. And I forecasted those free cash flows out to 2029. I used the numbers provided by the Wall Street analysts that are following Oracle stock and the forecast they made for its free cash flow over the next 5 years. Starting from the year 2030, I forecasted the cash flows at a transition growth rate of 14% for the next 5 years between 2030 and 2034. Then I have the company settling down starting the year 2035 to its long-term growth rate of 5% in free cash flow expansion. Now, since these free cash flows are owed to us in the future, we need to discount them because money in the future is worth less to us today. So the discount rate I'm using is 9.75%. And I arrived at that by giving the company a cost of debt of 6.5% and getting the cost of equity at 10.56% using the capital asset pricing model with a beta of 1.01 and a risk-free rate of 4.5%, applying a market risk premium of 6%. And since the company has total debt of 84 billion with a market cap of 529 billion, I gave them a target capital structure of 20% debt and 80% equity. So when we discount all of those cash flows back to today, we get a present value of the cash flows of $174 billion. And then starting from the year 2035, instead of applying this annual free cash flow, I can use a shortcut formula for the terminal value, which takes the free cash flow growth rate, free cash flow expected in the year 2035, divided by the weighted average cost of capital minus the growth rate, and that gives me a terminal value, which collects all of the cash flows that are expected from this company from the year 2035 on to infinity and brings it all back to this point in time in the year 2034, which gives me a value of 1.3 trillion. But as I said earlier, this is the value in the year 2034. I want the value today. And so I'm discounting this 1.3 trillion back to today, and the present value of that terminal value is $513 billion. When we collect the value of the cash flows, both the present value of the cash flows and the present value of the terminal value, we get a value of operations at $687 billion. All right, so now let me draw your attention here to the value of operations. And before I move on, if this is becoming too technical and too wonky, don't get alarmed. This is something I teach in my intermediate to advanced corporate finance classes at university. So this isn't a basic topic that's accessible for many of you who may not be finance majors. But I'm going through it step by step, sharing with you where I'm getting all of the numbers from, so you can get an idea of how these discounted cash flow valuation models are created. So we arrive at the value of operations at 687 billion. To that total, I add the non-operating assets, the cash balance of 10.6 billion, and then I subtract the debt of 84 billion, which gives me a value of equity at 613.9 billion, divided by the number of shares outstanding, which were 2.851 billion, brings me to the intrinsic value per share of $215 for Oracle stock. Using my discounted cash flow valuation model, this is what I believe the stock is worth today. Now, I compare that with the current market price, which stands at $190 per share. So, according to my calculation, it looks like Oracle stock is undervalued by about $25 per share, according to this calculation. Of course, there are many other ways to value a stock. This is one of the more popular ways to value a stock. And in my framework, this is part of my valuation step in my framework, which is the biggest step in the overall framework I use to evaluate publicly traded companies. So this is just one step. Don't take this as the final conclusion and take it as an actionable step. This is for informational purposes only. Use it for entertainment. Conduct your own due diligence before deciding to make a purchase on any stock. Of course, I have many more videos on Oracle stock on my channel. If you're interested in this company, please watch those videos before making a decision. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.